This week on Generating Alpha, I sat down with Keith Rabois, one of the most influential operators, investors, and builders in Silicon Valley history. Keith is a managing director at Khosla Ventures and a founding member of the legendary PayPal Mafia. He's been instrumental in building some of the most important companies of our generation, serving as an early executive at PayPal and LinkedIn, and later as COO of Square during its hypergrowth phase. As an investor, he's backed companies like Airbnb, DoorDash, YouTube, Yelp, Affirm, Ramp, among many others. For over 2 decades, he's operated at the highest level of company building, product development, and venture capital, shaping entire markets and mentoring the next generation of founders. In our conversation, we talked about how Keith thinks about identifying and backing breakthrough companies, what he learned working alongside Peter Thiel, Elon Musk, and Jack Dorsey, the principles that separate world-class operators from everyone else, his contrarian views on talent, culture, and scaling, and much more. If you enjoyed this episode, please follow the podcast and rate it a 5 stars on Spotify, subscribe on YouTube, and share it to anyone who you think might find it valuable. Thank you, and I hope you enjoy listening. Thanks, Keith, for coming on. I really appreciate it.
Pleasure to be with you.
Well, I want to start off where I always do, at the beginning. If I'm correct, you grew up in Edison, New Jersey. Tell me a little bit about your childhood, what your early environment looked like. Yeah.
Yeah, that's true. I grew up in Edison, New Jersey. I spent the first 18 years of my life in New Jersey. I went to public schools in New Jersey. Thought I was kind of on this pre-law, pre-political trajectory. So was pretty much intending, to stay on a very conventional professional path. And, did all the things one does to get into a good college, all these extracurricular activities. I probably was president of like somewhere between 3 and 7 different clubs simultaneously and did a lot of like debate and Model UN stuff, played some soccer, high school newspaper, blah, 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 blah. Crazy enough, was even like treasurer of the French Honor Society, like everything from the sublime to the ridiculous.
And after high school, you went out west to Stanford in the late 80s during a very interesting time in kind of Stanford history, during which the Stanford Review started, also during kind of the tail end of the Cold War, where I'm sure many of those controversies kind of got brought up on campus. I'm interested in just how that time shaped you as a person, how you got to meet those people early on at Stanford that ultimately ended up kind of you were working with for the rest of your career. Tell me about that like 4 years at Stanford.
Sure. So yeah, I went to Stanford in the late 80s, finished in the, sort of early mid 90s and studied political science. On the Cold War stuff, interestingly enough, we were covering a lot of my majors was political science and strategic political science. And we were covering a lot of debates about realism and idealism and liberalism and how those how it should be applied to military doctrine in the Cold War, political doctrine, and political competition with the Soviet Union. Obviously, a lot of that got obviated a few years later, although the structural strategic planning elements of political science, Clausewitz, et cetera, are are never out of date. The nuclear deterrence strategy and things like that still apply in many ways, like how to think through in more of a multi-power world than a bipolar world. But fundamentally, that stuff is really useful, and still is. But again, I was calibrated towards like how do I get into a really attractive law school, high credential as a high credentialist kid. I did get involved in the Stanford Review by accident, sort of. The first day, literally the first day of my freshman year, I was sitting in my freshman dorm room, and this guy shows up and delivers what was actually the second edition of the Stanford Review. This is September 1988. And I look at it and I'm like, what is this? And there's some photo of like cartoonish kind of photo of Ronald Reagan on the cover, I believe. And it looks interesting. And so I started a conversation with the person who's hand delivering this to my dorm room, which is how basically how content got delivered back then by all like student organizations, flyers, pamphlets, etc. And it turned out this guy delivering to my dorm room was Peter Thiel. So I got involved, recruited into the Stanford Review, started writing for the review, editing the review, spent, many years of my career in college, working on the review, writing for the review, editing the review, recruiting the review. But it's all very spontaneous. Um, got to know Peter quite well, mostly through Stanford Review and other like sort of projects like that. Didn't really ever think it would evolve into a business kind of connection. Peter was on the fast track. He was about 2 years older. I think he was a junior at the time. Maybe he was a senior. He was on the fast track to law school, wound up attending Stanford Law School, clerking for an appellate court judge in the 11th Circuit, and then working at this law firm, Sullivan Cromwell. I thought that was my like also natural trajectory. And in fact, I followed most of that. I went to law school, clerked on the Fifth Circuit, which used to be part of the 11th Circuit used to be part of the Fifth Circuit, so pretty similar. Wound up working at the exact same law firm of Sullivan Cromwell. He was smart enough to quit after 3 months and 5 days, realized he didn't want to be a transactional attorney for the rest of his life. Probably fairly prescient. It took me 3.5 years after clerking to figure out that I probably shouldn't be a litigator for the rest of my life. But eventually wound up in the same place.
Did that time clerking teach you anything? Because I interview a lot of people who went to law school and who worked as lawyers for a little bit before they pursued their careers in various types of investing, and they say kind of taught them how to think. Was there any type of value in that for you, or?
Yeah, absolutely. There was a lot of value in attending law school. I think you hit diminishing margin of returns after the first year, and maybe you could justify the ROI up to 2 years. But fundamentally, a lot of the law, for better or for worse, a lot of the society today, business, personal life, whatever, is like regulated, overregulated, arguably, but infused by law and regulation everywhere you look. And so having a native, kind of first principles understanding of how does law and regulation work, what's art, what's science, what can be manipulated, what isn't, has been very useful. In financial services, where I've been both an entrepreneur and an investor for a long time, there's a lot of constraints that are imposed by law and regulation. Really understanding the law and regulation and how to manipulate the law and regulation has allowed for product level flexibility and innovation, versus having to outsource that. Same thing, other areas have had success in are related to IP risk. I was an IP litigator as well. So I really understood that stuff from the first principles. When YouTube was founded, I sort of did the diligence, the IP diligence for them on behalf of the company, on behalf of their VC together, because I could do it all in my brain. And that's pretty rare. So being able to assess legal risk and quarterback, calibrate in your own brain versus outsourcing it into some law firm or some lawyer is a very strategic advantage. It's also helpful in negotiation, being able to trade business terms for legal risk, legal exposure, and there's like kind of you take on that risk while I pay you 20 cents more, or or I don't take on that risk and you pay me, I pay you less or whatever. Usually, if you have two different people working on the project, they can never speak the common language, and so that's not possible to make those trade-off decisions. So it's been very strategically useful, and it has been relevant to some jobs as well. PayPal, part of my roles over the years when I was working at PayPal was to use the most of the federal government to ensure that our enemies, and we had a lot of enemies at PayPal, from Visa and MasterCard back in the day that tried to kill us, and eBay that hated us and tried to kill us. And later, post 9/11, due to the Patriot Act, the Treasury Department wasn't our best friend. Um, being able to use the political and legal world to help defend the company became a core part of my job, and having the legal experience, expertise, and network, truthfully, of like who to retain, who to work with, and why, was incredibly valuable.
And so we'd love a little bit more clarity on how you went from kind of Sullivan and Cromwell to PayPal. And then ultimately, I'm interested in how that your time there kind of shaped your thinking on competition, or because it seems like everyone wanted to kill you.
Everybody did want to kill us. Maybe that, explains Peter's view that competition's for losers or something. He's like a byproduct of his own history. But yeah, so I was working at Sullivan Cromwell. I clerked for a year post law school graduation, which is what most, sort of highly credentialed law school graduates aspire to do. I worked for my hero, this federal judge named Edith H. Jones. And it was an incredible experience. And then after clerkships are typically 1 year long, after that, you go back into practice. So I became an antitrust litigator, kind of a white collar criminal defense, and to some extent IP litigator at Sullivan Cromwell for the next 3.5 years.
Wow.
So basically left at the height of the internet bubble of February 2000. I jumped out of Sullivan Cromwell as a beginning fifth year associate into this crazy wild, wild world of the internet. what later would be called the internet bubble, but like at the time was the internet revolution. And so I jumped in it. I was recruited into it. I had like a kind of a mutual friend from college that I kept in touch with that had been successful in the first generation of the internet with a startup that got acquired by this cool trendy company at the time, search engine called Excite that nobody remembers, but Excite was cool and trendy and valuable for a while. And so after his Excite experience, he got recruited to help start another company. He thought of me. There was such hype around the internet that density of talent was it was really difficult to arrange. So you couldn't just hire the most obvious candidates for new startups. So they were desperate and hired like recovering lawyers like me, management consultants, whatever. So I had an opportunity to jump careers. I was crazy enough or prescient enough to do it in fact the height of the internet bubble, February 2000. 6 weeks, 7 weeks later, after I started, the market collapsed. So the advice I got that I would enjoy this, that I might be successful at it, was all probably pretty good. The timing was about as bad as you can get. So I left this really like prestigious law firm to jump into this completely unknown startup when that was cool and interesting and everybody was kind of doing it, so to speak. And then, the world changed 6 weeks later and had to learn to sort of swim for myself.
And you were talking about how kind of it was really hard to create talent density in that internet bubble. How did, in the wake of that internet bubble, why do you think, what was unique about that pool of talent at PayPal? And why do you
Yeah.
think like the members have achieved such successful outcomes?
Well, obviously, Peter and Max deserve the credit. They did virtually all the hiring. Max hired basically all the engineering talent, were friends or friends of friends that he either went to high school or college with at the University of Illinois, Champaign. And so it was very difficult to get into the engineering group unless you had strong connections. We basically didn't hire anybody that was more than 2 degrees removed. Peter hired most of the business people, product kind of people. So they, had an eye for talent and they marshaled this critical density. Part of the reason they were successful was we hired sort of different types of people than the more homogenized larger companies would have. Most of the PayPal people were a little odd, a little weird. Max Levchin said on stage 18 months ago that I was the most normal person that worked at PayPal. And I'm not sure that's a compliment coming from him. That's partially an insult, but it's actually factually probably true. So if you think about me, who's generally considered a little bit like an outlier somewhere, being the most normal person, you can imagine what everybody else is like. Yeah, I think Peter starts 0 to 1 somewhere early, and he talks about how of the six, sort of founding team members of PayPal, at least four of them built bombs in high school. So there's a rebellious streak. Now, before you get a little nervous about that statement, at least three of the four of them were living in communist countries while they were building bombs. So pretty justifiable.
And after PayPal, if I'm correct, among other things, you spent time at Square and LinkedIn in biz dev ops. I'm interested, why be an operator? You were kind of in this very interesting place at PayPal where a lot of the people ultimately became founders. Why be an operator?
Well, I didn't think there was any other realistic choice. I might have understood what venture capitalists did at a high level. I certainly read these books written about the late 90s and the internet bubble about VCs, but I didn't really have enough direct exposure or enough expertise. I thought it was somewhat aspirational and I was intrigued about investing, but I started taking baby steps and truthfully very much were baby steps of angel investing.
Mhm.
And I'd angel invest in some startups, but the reality is I was investing in startups founded by friends of mine from PayPal. So if you look at my first five angel investments, one of them was LinkedIn, one was Palantir, one was Yelp, one was YouTube, and the fifth one was Zoom. Unfortunately, not with Z, but with
Yeah,
an
the Kevin
S.
Hart Zoom.
Yeah, Kevin Hart's. But Kevin didn't work at PayPal, but he was an early investor in the company. So all five were derivative from my PayPal days. So it wasn't like as I was going out to the world and meeting all these people. I was just cherry picking who at PayPal that was going to start a company I thought would be a successful founder. Turns out, all those investments thrived. So I started like sort of 4 for 4 or 5 for 5, which is a pretty good way to become an investor, but it wasn't really by intent. It was totally serendipitous initially.
It's absolutely incredible. Incredible portfolio, and I mean, starting off going 4 for 4 or 5 for 5. Yeah.
I should have just retired, I think.
Going on top. And
Like
during
Sandy
the
Kof it's like Sandy Koufax, leave while you're ahead.
and you also started like you angel invested more kind of you did more volume angel investing in the late 2000s, if I'm correct, with Kevin
Oh, then I kept,
Angel
yeah, like
and
once
Javed.
once these companies were tracking well, then I started scaling and doing more angel investing. I realized I liked it. I realized I had the shot at being successful at it, and wound up, investing and transcending that like initial network. Like I invested with Kevin and Javed, as you mentioned, in like Airbnb and things like that that weren't directly, related to PayPal.
And what do you think were like the most formative investments over that period that made you kind of think, oh, I want to be an investor full time, or really just shaped like your philosophy on investing in early stage companies?
In many ways, joining both Zoom and I'd say Zoom and to some extent Yelp probably were the most formative because in both those cases I joined the board of directors, which is a closer proxy for being a VC. In many cases, an angel writes a check and doesn't really do that much. But as a very active angel, meaning like I would join the board of companies, or even if I didn't join the board, I would be acting in a fairly similar way as a consigliere to the founders. So I did that with like the YouTube guys and Chad when they were first starting YouTube. So I even hid YouTube when they were small in the excess part of LinkedIn's offices, so I could kind of meet with them, quickly and easily, and see what they're up to. But I think that was probably more formative as not being a passive angel investor, but being an active board member and participant in the company building stages was probably a better predictor for where my career would eventually emerge.
And in your eyes, what does being a consigliere to founders mean?
Well, it's like just like a consigliere if you watch these old,
Godfather.
mafia, yeah,
Yes.
mafia movies and stuff. It's just like giving advice and counsel to the primary decision maker, which in a company is the CEO. And the advice and counsel can be like they may be struggling with a challenge, like I don't know what to do. What should I do? Do you have a set of ideas, initiatives, conceptual frameworks for answering this? Or sometimes it's giving them feedback that maybe other people are afraid to, more like in a mafia sense of like, hey, the CEO is, pretty intimidating. He's really successful. I don't know if this idea is the best idea. Sometimes I'll, be helpful in challenging the CEO and, just asking probing questions. Are we sure this is right? Are we sure we're measuring this with the best methodology, et cetera? Are we sure like, the opportunity cost here is better or worse than there? So just asking questions. And then, being a founder is extremely lonely. Over the last 20x years that I've been in tech, become very close with a lot of founders, work very closely with them, sometimes for more than a decade at a time. And you see, if you get to know someone really well, you can feel the loneliness, you can see it in their eyes. And so having someone who has context, who really understands the company building process and the state of the company, that can be a sounding board and just someone to talk to, almost like in a pop psychologist way, is really valuable.
And how do you think that counsel and advice you give to founders is like more well educated or better in a sense than the majority of VCs like yourself?
Well, I think very few VCs have actually suffered through there's virtually I've probably suffered through virtually every kind of challenge that exists in building a company. And there's like daily, weekly, monthly, quarterly challenges. And I've probably confronted them all at some point or witnessed very firsthand every possible version of a good answer and probably made every possible version of a mistake. So, a lot of the advice is it's not that the idea the path is bad or good. It's just that the grass isn't usually greener, meaning there's significant trade-offs. And so sometimes the best I can do is to point out the trade-offs, saying you can do X, and it's a pretty good idea to do X because of the following reasons. However, you should be alert that these are the things that typically go wrong or the side effects or the collateral damage. So make sure you're choosing intentionally and wisely that this is definitely what you want to do. And that's a benefit of a lot of experience, both horizontally and over time.
It's more about giving those mental frameworks rather than telling them exactly what to do or being
I
like, you
never,
do this, you do that.
I basically
Yeah.
never tell a founder what to do. The joke, there's a running joke I have with my best friend that like who's a founder that I once told them what to do once, and like I can remember every time I've ever told a founder what they actually should do. And like so usually it's more like here's a framework for thinking through the problem, and you can see whether it's resonating by whether their eyes light up. But it's never a there's times where I might react like, like visibly, like I wouldn't do that. But then I usually take a step back and explain, yeah, the reason why I wouldn't do that is I got burned doing that, or I watched this person getting burned doing that. So you can explain the logic and then let them chew on it. And usually they'll have a rev or two, like, what if I did it this way and torqued it or remixed it slightly?
And we've talked about advising seed stage founders. Before you get a chance to advise them, you first have to invest in them. So, what are the things you look for or index most highly on in seed stage founders?
It's pretty straightforward. It's like I meet someone and then it's like, do I have a reason to believe this person has a non-zero chance of changing the world or transforming an industry? If you think about that, it's kind of ridiculous. Like you start a company with your friend from college or your roommate in his proverbial garage, and you're like, I'm going to reinvent financial services, or I'm going to reinvent all of the future of news and news consumption, like X or something. It's kind of an unreasonable and borderline irrational, sometimes delusional ambition. But there are people who have a moderate chance of pulling it off. So the art of being a seed stage investor, VC, angel, consigliere, whatever, is assessing people and understanding whether the probability, which in a normal person's hands of changing the world is zero, rounds to zero, to something that's not zero. That's the number one. That's the number one criteria. Is there a non-zero chance that this person is going to rearrange the world to their will?
And before we go back to the episode, I want to take a short break to talk about my sponsor, Row. The Generating Alpha podcast is presented by Row, the all-in-one banking platform for startups. Thousands of startups like Perplexity, Product Hunt, and more use Row. You get everything you need to manage your startup's cash. Fast banking setup, cards with up to 2% cashback, and yield that turns company cash into extra runway. All super important in the early days of launching. But the thing founders really love about Row is their team. They're obsessed with helping founders disrupt the status quo and will go to the end of the earth to help them to do so. And exclusively for Generating Alpha podcast listeners and viewers, you'll get a $1,500 statement credit plus a ton of exclusive perks when you manage your company cash with Row. Terms and conditions apply. To learn more, visit rho.co/generating alpha. Row is a fintech, not a bank. Checking and card services provided by Webster Bank, member FDIC. See reward terms for details. Thank you, and back to the episode. What should a seed investor be good at?
Sorry.
What should a seed stage investor be good at?
Well, you can be successful with different advantages, let's say. I think every sustained, consistently successful seed investor has their own comparative advantage that they're tapping into. So for me, it's like the founder assessments. Like I meet this person, may have no context whatsoever, may have never met them before in my life, may not even know anything about them. And in, 3 to 30 minutes, try to figure out if they're going to change the world or not. For other people who are successful seed investors, they can be technology-based investors. They can see and hear about a new technology and immediately grok the potential implications, consequences, and market opportunities. And so if you're extremely effective at that, that's your comparative advantage. And then you're just scouring the universe looking for new tech developments that can rearrange industries. So it depends on the person and what their unique assets are, what the right strategy would be.
And in that first 3 to 30 minutes, what are some examples of that X factor kind of bubbling up to the surface in founders you've met?
It's really easy, actually, truthfully. It's hard to describe, but easy to know. Just like your ears just perk and you're just like, wow, I've never seen that before. And it can be a different variable. Like it can be like, wow, that's the smartest person I've ever met in my life. Or that's the most tenacious person I've ever met. Or that's the best salesperson I've ever met. Or like that is the best whatever. It's like that feeling of, oh my God. It's a little bit like you sometimes read scouting reports about like high school baseball players or basketball players, and it's kind of amusing to read ones about like people that became very successful, like Hall of Famers. And sometimes the scout actually nailed it. You can just read these reports about this kid who was 16 years old, and the scout's just like, this person is going to the Hall of Fame.
And how much time do you spend with founders before you make an investment on average? I know you made 3-minute investments, but like, On average, what does that look like?
I know 90 plus percent of the time, I know whether I'm going to invest definitely in the first meeting.
Okay.
And I can get talked out of it by, one of my colleagues. I can get persuaded not to because of something I learned in some pseudo diligence process and some follow ups. But 90% of the time, I've already made a decision and I'm just rationalizing it and making sure like I haven't missed anything. So, and sometimes it might be like, well, I'm right that this is a good thing to invest in, but the founder wants some terms that just don't make economic sense for us. That does happen, unfortunately, pretty rarely, but it happens. Or some of my colleagues might know more about a particular person or industry or something. And they might persuade me, that I should maybe curb my enthusiasm a bit. That does happen, but like 90% of the time, X minutes into the meeting, I've already made a decision. And people who shadow me, like I usually have a chief of staff shadowing me, can tell. Like they just shouted me like for a year or two at a time. And the chief of staff almost always has figured out before the meeting's ended whether I want to invest. And they're not even asking, like, do you want to invest? They're like, should I send a memo, around about the company, blah, 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 et cetera.
And how often during in a month or in a year do your ears perk in one of those meetings?
Uh, Average year, probably about 8 times.
Do you make only eight investments or
Yeah, pretty close.
yeah.
I think I've averaged, so this is my 13th year or so as a VC. I think I've averaged 10 investments a year. So there's some years, especially during COVID, that was less. Some years a little higher. So maybe eight and maybe a few at the margin I shouldn't have made. So eight's probably about right.
And you were talking about kind of having comparative advantage. How do people find their comparative advantage early in life?
I think you have to sample and do, there's this book called Range and about, exploring different things in different careers. Like I was a lawyer, was a little bit involved in politics. Nobody would have guessed when I was growing up that I'd be like a cutting edge tech entrepreneur. There wasn't even such a thing to really be, but like, even if there was, because I was more credential seeking, I was, like I remember one of my good friends from Stanford saying to me, like as he watched my career change, I remember my friend Chris saying to me, "It's like Rabois, you were the most conservative person I ever met, and now you're like the most risk loving. Like, what happened to you?" Um, so like it wouldn't have been like that obvious. But I think when you sample different things, you look for common denominators of areas where you've been successful, positive feedback. So I have like a sort of a piece of advice that I give up and coming entrepreneurs, up and coming executives, up and coming like potential VCs, even. They say if you're trying to find your unfair advantage, the best way to do it is find roughly five, maybe 10 people that actually really like you, and then ask them why. And then just write down verbatim, like the whys. Don't try to edit it. Don't try to think it through. Write them all down. Once you've finished all five, six, seven, 10, it's really easy to do. If you ask people like why they like you, getting positive feedback's really easy. So just write them down, put them on a notebook, then look for common refrains, and that's your answer.
I want to do that. I'm gonna get on it. And I asked, we have a couple kind of friends in common, one of which is Anthony Pompliano.
Sure.
And this was a question from Pomp. What attributes of the best companies are the most misunderstood?
That's a good question. Again, I'm not using as much of a company specific lens as he might or others might. But what I would, in that vein, I think that every great company in companies that have the potential to be iconic, there's anomalies. And it's kind of understanding what the anomalies are. Like, think about it this way. If you're going to be extraordinary, there should be some outlier somewhere showing up. And so what I do when I read an introduction, about a company and someone's like, "Do you want to meet so and so?" Or I read a deck, which like review lots of decks. I'm looking for anomalies, something unexpected. It doesn't even mean I need to understand why it's unexpected. And it doesn't always have to be positive. It's just something that's unexpected because, like, basically, the force of gravity, the forces of history, like, are towards inertia. And so you need to see something that defies your kind of conceptual framework. And that's what I'm looking for. And I think exceptional companies, and to some extent, exceptional people also have that. But the exceptional companies almost always have it and almost always have it fairly early. You can use different vocabulary in some ways. If you read, 0 to 1, Peter's always talking about and prescribing more like what's your secret. And there's some difference between a secret and an anomaly, but they're close cousins.
And how do you I mean, I do you or do you not characterize between good and bad anomalies? Anomalies. Do you think there's just anomalies, or do you think there's good and bad anomalies?
Um, I think there are mostly good anomalies is what you're looking for in investment. With
Yeah.
people, you can look for sparks kind of on both sides because if there's a spark over here and it's perceived as negative, there might be a sort of offsetting positive. But I think in a company, it's rare that the negative anomalies are truly positive signals, but not never. I don't, well, let's put it this way: homogenization is not your friend. Like if you're starting an outlier, or we're in the outlier power law business, however you want to describe it, anything that feels bland and homogenous probably isn't going to be one of those outliers. So I'd rather see at least some outlier than none.
Let's say you're investing in a seed stage investor. Let's say you're giving them $1 million. In 30 seconds, what's the advice you're going to give them over the next year? Or like very densely summarized. Or like, yeah, very,
It does vary by company, truthfully. Like, I mean,
yes.
critical density of talent, marginal critical density of talent is probably a common refrain across all successful companies. But if you go beyond that, I think then it matters like what are you trying to build in what market? What's the landscape? Like what's your value proposition? Is it a non-consumption market? Is it a competitive market? So I think what we try to do is try to identify what are the key inflection points for the company and then tackle them in the order of degrees of difficulty, actually, which is somewhat counterintuitive. Take the most difficult ones first, not last. And so it's like, okay, what are these inflection opportunities? And then can we address one or two immediately? Because that's what causes momentum, perceived momentum, investor momentum, valuation increases, and then confidence. Like if you know this is the biggest issue and you solve it in year one, your own personal confidence about the success of the company should be massively, increased.
And I want to talk a little bit about the funds you've been at. You've been at Khosla for some time and you were at Founders Fund before, and then I'm pretty sure Khosla before as well.
Yep.
What makes these are two of the most kind of prestigious venture funds in Silicon Valley? What makes them great?
They're different. There's some common denominators. I'd say the taste in founders between Founders Fund and KV is pretty similar. Um, Scale of ambition, I think, for the kinds of companies both funds like to invest in is pretty similar. The biggest differences are at the company level is at KV, we're very highly technical. We prefer to take on technical risk. We're comfortable investing in technical risk. At Founders Fund, that's not the norm. Secondly, at KV, we want to be as early. Our mantra, our official strategy is bold, early, impactful. So bold means we want to be the first institutional investor. And every time we're not, it's a flaw. FF is the best momentum growth investor, I believe. They're excellent at figuring out which companies have a shot of really working and investing a lot of money with conviction and consistently, actually multiple rounds. And so that's not been the historical KV style. We want to be as early, your first believer, and your most impactful, influential advisor.
And we were just talking about Silicon Valley firms. We were talking about investing in companies in Silicon Valley. As a Valley investor for the last 20-ish years, why make the move to Miami?
Well, I think SF was completely broken, and California still is broken. During COVID, SF was unlivable in so many different ways. And, your life, everybody's only going to live a certain number of years, whether you live 30, 40, 50, 60, 70, 80, 90, 100. They're scarce. Time is your most valuable asset. Something Peter actually Thiel taught me very, very articulately in 2002. And he basically said people systematically undervalue their time. And so I was basically said, I'm not wasting 1 or 2 years of my life being locked down at home. Um, and just got to escape. And guess what? Miami was the most open, vibrant city in America. It's still also, by the way, the best city in America. If you value happiness or healthiness, over the last 5 years, the worst Miami's ever rated on happiness and healthiness is second. Most of those years, it's ranked first on both. So I think if you're happy, you want to be happy and healthy, Miami's great. Secondly, Miami has a very refreshing culture, which is you emulate successful people. So if you have young kids, everybody in Miami is raised to value successful people, not begrudge them. You look at California with these
Yeah.
insane ideas of like wealth taxes and overtaxing people to death. Like it's just like a bad culture. It's culture of envy, at least, and that envy is a sin for a reason. So I think escaping was great. The thing that saved SF, which was unexpected, but can happen, is OpenAI. OpenAI actually, with the advent, particularly of ChatGPT, created a new wave of momentum in tech, and it happened to be centered right down the middle of San Francisco, and that created a vibrant sort of community and an optimistic set. And then that led to possibly fixing the government and leadership to some extent of SF. It has not led yet to fixing and correcting the government and leadership of other parts of the state or the state itself. So we're going to see how that plays out. I mean, obviously, there's been a lot of news recently about California and the exodus of successful people: Peter, Larry Page, Sergey. I'm sure there's a lot more that haven't yet got the headlines. So I think that'll be an interesting, sort of kind of drama over the next 2 years. But I think Miami is still the best city in the United States. Like for New Year's, I was at a New Year's celebration with David Guetta, who's a really good DJ, and he starts his set by saying, "I'm so happy to be in my favorite city in the world, Miami." And then later he's like, "Miami is the best city in the world." And it's obviously he's a DJ, but he also has traveled all around the world. He's probably played a show in like every major city in the world, like literally. And so, that's the kind of enthusiasm. We have the best sports teams in America in Miami. We have the best politicians. Like if you think about all the influential people in DC right now, they're all Florida based. Like, you got Marco, you've got like the president, you've got like Susie Wiles, all these are Florida. So like I think it's great. We'll see how, if it can capitalize on this. It's it's been a very well run, safe, very efficient. I think Florida has roughly the same amount of people as New York State, and I think taxes its people at like one third the rate.
Nuts. And you talked about valuing your time. What is a day in the life? What does your day in the life look like? An average day.
Average day, I wake up pretty early. I'm kind of one of these like get a lot of sleep, dedicated to sleep. I've been on the sleep crusade forever. One of the reasons why I funded H Sleep originally was my friend who's a seed investor was like, "Oh my God, the most the most addicted sleep person I know is Keith. I'm going to send you this company." It turned out led the seed in Series A in H Sleep, but like I fundamentally orient my schedule around getting 8 hours sleep if I can. So I go to bed pretty early, wake up usually pretty early, inevitably do a workout at like 6 or 7 a.m. Uh, by that time, I've already scanned all my emails, usually read X. So started my brain processing things, even if I haven't responded, and then finish, and then I have a chance to digest, relax, eat breakfast, and then pretty much off to meetings, pitches, et cetera. A lot of one-on-ones with CEOs, some board meetings. Typically, you have about 3 board meetings a week on average.
Wow. And this is an interesting question. I got this from another mutual friend of ours, Kevin Hartz. If you were to force rank your historical bosses, what would that list be?
Oh wow! Well, the historical boss list is pretty good. Like, all right, so you have in some ways Vinod, Peter, definitely. You have Jack Dorsey, Reid Hoffman, Max Levchin. Um, so it's like ranking. It's like taking your NBA All Star team and trying to
Yeah.
rank them. It's probably a bad idea.
And this is a final question I ask every one of my guests. I'm 16 right now. If you give one piece of advice to a 16-year-old today, what would it be? It can be about anything.
Yeah, it's actually something I discovered when I was 16. I literally was 16. So I read this autobiography by Pat Riley, famous basketball coach, later general manager,
Okay,
earlier
yeah.
player. Yeah, Heat, Lakers, Knicks. So he was kind of my like athletic hero, kind of growing up as a coach. And he had wrote an autobiography that I read when I was a junior, sophomore, maybe junior in high school. And in it, he quotes Jerry Garcia, the Grateful Dead. And his advice is you don't want to be the best at what you do. You want to be the only that does what you do. And so I think that's the key is figure out how you can become the only of what you do.
Well, it's been an honor, Keith. Thanks for coming on, and really appreciate it.
Pleasure. All right. Take care.
All right.